A lot of you may have heard of Danielle DiMartino Booth. She used to work at the Fed. You've probably seen her on other YouTube channels that you guys watch. She's done, countless interviews about this recession that we're currently in. And funny enough, she recently stepped forward and said that the catalyst that's likely going to cause this next recession is going to be unemployment and how people are running out of unemployment benefits. Crazy, because I just talked about this the other day in my video in San Francisco. She cited a few different interesting statistics that we can look at with the job market right now. One of them being that according to the BLS, 21% of workers are now taking more than 27 weeks to find a new job, which is up 3% from last year. And the average unemployment duration in the US climbed to 21 weeks in September. Now, if 21% of people still don't have a job after 27 weeks, guess what, guys? Unemployment benefits expire. So if you're already struggling financially and you have unemployment benefits that's already not paying the full amount that you made at work, and then you lose that too, then you're probably going to be starting to go delinquent on many different forms of debt that you owe on. And as we can see, this number is rising. More and more people are taking much longer to find jobs than last year. And this is a trend we're likely to continue to see rise, as many businesses have recently come out and said that their hiring plans going into the next year are way down from where they were a year ago. So just at the moment in time when so many people are losing their jobs, it's harder and harder to find a job, and unemployment benefits are expiring for people that are having a hard time finding a job. Where do you think that leaves us with the future of this economy? Probably not in a very good spot is my guess. Here's another thing that she pointed out, is that the number of part-time workers in the US, which has climbed to an all-time high, suggests that the hiring picture isn't as strong as we're being told, just like so many other things that have been a lie recently. The number of employees that usually work part-time climbed to 28.2 million in August, which is the highest number since the government began recording the data in the 1960s, guys. That's insane, okay? Going back to the 1960s, we haven't seen this many people working multiple part-time jobs. That's how unhealthy, that's how sick our economy is right now. This is why we actually need this recession in order to heal. The recession is kind of like the antidote to the sickness that we have right now. Unfortunately, the government and the Fed meddle in things so much, even when we have a recession, that they try to bring us out of it artificially. In the end, what they do is they end up making things worse. So when you have over 28 million people working multiple part-time jobs, those are all the people that are not claiming unemployment, because they're not eligible to claim unemployment if you're actually working, right? So that's a problem too. You have multiple people trying to just keep the lights on and keep the bills paid with these multiple part-time jobs that they wouldn't have to have if they could just find one good full-time job. Here's also something that she said that I have mentioned on the channel before as well, is when someone loses a job, now that we have the gig economy, it's so much easier to just pick up your phone and start driving tomorrow for Uber or Lyft or Instacart or Grubhub, something like that. One of those delivery services, you can literally start the next day and start earning money without having to go through the unemployment process. A lot of people don't want to go through that. It's very time consuming. You have to wait a week or two to get your first paycheck. And why do that when you can start earning money right away by doing gig work, which is a good thing, right? It's a good thing that that exists for people, and it's an option. It's a good safety net that we have. Unfortunately, a lot of people that do this also don't really make enough money at it, but it's probably better than nothing. According to the most recent beige book from the Fed, it shows that in most districts that the Fed tracks, consumer spending and consumption is either going down or falling flat. She pointed out how the manufacturing sector contracted 21 out of the last 22 months. The housing market activity has been non-existent. We know that. We'll have to see what happens with the next GDP reading. But even that, guys, I feel like is another one of those numbers that you really can't trust, just like unemployment and the job growth figures, because you have to understand that GDP is fed by a lot of things that really don't contribute to the economy, like all the government spending. You know, all of this money that they spend and give to Ukraine and Israel and all the illegal immigrants and all this stuff all contributes to GDP. So they can just give more and more money in those departments and basically give away our hard-earned tax dollars and say that GDP is going up and everything is great. And also there's a chance that, just like the other government figures, that the GDP numbers may get revised down just like the jobs numbers did. And the reason I trust a lot what she says is because she's actually someone that used to work at the Fed and sees how they operate inside and out, and knows that they're probably kind of like covering this situation up, right? They don't really want to admit where things are at with the economy right now, and a lot of it could or might not be politically motivated. So why would somebody in her position have to lie about this? I mean, what do you have to gain? And obviously, if you used to work somewhere and you don't anymore, you no longer have to play their games and, you know, cover up all of their mistakes and problems. To me, it sounds like she's just revealing the truth that we all actually know deep inside, and this is just a verified source that what we think is coming actually is coming. One of my viewers, April, she just wrote me about the layoffs that are happening at Cisco, okay? I talked about this a couple weeks ago when it was announced. They said that 7% of the employees at Cisco would be laid off, but they weren't told who was going to be cut until recently. So many Cisco contractors were also cut, in addition to the 7% of employees that they cut. So the 6,000 plus employees that they cut doesn't even include the contractors that they are working with either. That's yet another layer deep of all these job cuts that we've heard about recently that no one thinks about. Even me, I haven't even thought about this. It's something that never came to my attention until now. Like, you see how many people lose jobs, you see the unemployment claims, but all of that is just one layer deep, guys. What about all the contractors that aren't getting paid anymore because the business is trying to cut back? What about all the people that are falling off unemployment because they've been on it for 27 weeks or longer, who are collecting zero now? Like, those are all things that just get swept under the rug. You never hear anybody talk about this stuff. And for anybody wondering, I'm not really sure what this area is called that I'm walking by. I'm walking by the bay up here in San Rafael near Pickleweed Park, in case you want to look that up. Now, one thing we haven't talked about in a while, but is still a big looming issue for our economy at large, is the office space crash, and how many buildings, how many commercial buildings are selling for way less than they sold for just a few years ago, which is very problematic. It's problematic for cities and counties because it greatly reduces the amount of tax revenue they can collect. It's problematic for the banks that hold these loans. Many of them are smaller banks that are just going to take a loss on this. And it's not good for businesses either that maybe have their businesses set up in these buildings. But just this week, over in Minneapolis, St. Paul, there was a building that sold for $6.5 million. In 2019, sold for $73.7 million, guys. That's how bad this is getting and how worthless these office buildings are becoming right now. I don't know how much in property taxes a building like this was paying when it was valued, you know, north of 70 million, but how much do you think it's going to be paying once it gets valued down to $6.5 million? And rightfully so, right? These property taxes are all theft anyways, so good for them. Glad they're not going to be collecting as much money anymore. But this is going to have major ramifications on city and local budgets. It's going to have ramifications on businesses and the banks that are holding these loans. There's other examples in Minneapolis that also have commercial buildings that sold for 80% less than its previous value. Another one sold for 70% less than its previous value. I mean, this is a major downturn in commercial real estate. And I'm not saying that this has a direct result or a direct way that this is going to translate into major losses for residential housing, but it could if banks start getting in trouble over this or businesses start closing down because of this. And we're already seeing the layoffs and unemployment tick up. The last thing people need right now is to have that exacerbated by the commercial real estate crisis. And people who discuss this regularly say, look, this is a necessary part of correcting the office market. You know, we need this to happen. And I think you can say the same thing about residential real estate. Now, are we in danger of seeing prices go down by 70 or 80%? Probably not. But I think it is reasonable to expect prices in a lot of areas to fall 20 or 30%, guys. If nothing at all, at least in the amount adjusted for inflation. You know, I showed you the other day how in downtown San Francisco, these properties have dropped 20 to 30% in value over the past 5 years, okay? But that is not including the adjustment for inflation. And when you look at the official inflation numbers over that time period, about 23%, when you tack that on to already 20 or 30% price reduction, now you're talking a 50% loss over 5 years when adjusted for inflation. That is a major housing crash. And there are places throughout the country that are experiencing this right now. Now, really the main benefit for a lot of these office buildings trading for pennies on the dollar right now is that the new owner that picks up these properties on the cheap is going to have more options on what to do with that property. Some are going to make an attempt to turn a commercial property into residential, like you guys have heard. Other ones are going to maybe use renovations and updates in order to attract better commercial tenants, things like that. So overall, it's a good thing. But also, if you pick up the building for cheap, then you can also offer very low commercial rents. You know, it's easy to find a commercial space for lease right now. Just in the few blocks I walked downtown San Francisco, every single block had empty retail space, guys. It's not hard to find a place to rent. But if you're asking crazy amounts of money and there's vacancies everywhere, those places are going to continue to stay vacant, and it's not going to bring the local economy back to life. Now, another thing we're seeing happen right now is consumer confidence continuing to go down. As of the most recent September reading, less and less people are feeling confident as the concerns about the job market grow significantly right now, and rightfully so. The Conference Board just said that the Consumer Confidence Index fell to 98.7 in September from 105.6. Sounds like a radio station, huh? 98.7, the recession. This was actually the biggest month-over-month decline since August of 2021. Things are kind of heading in reverse right now as far as the way people feel about this economy. And this was before the Fed announced a bigger than expected half-point interest rate cut. A lot of people thought it's a good thing that the Fed was cutting by 50 basis points, but smart people realize that it's actually not a good thing. It means that they are actually gearing up for this recession right now, or trying to prevent it, which probably isn't going to work. Right now, consumers' assessments of the current business conditions turned even more negative. People's view on the current labor market turned further negative. You know, consumers are also more pessimistic about the future of the labor market conditions and less positive about their future income. This is a problem. They say that when Americans' short-term expectations for income, business, and the job market fall below 80, it can signal a recession, and right now we're sitting at 81.7. So just barely right there, guys. You know, we have all these different economic data points we talk about on the channel, and all of them are pointing towards this. But I think it's a very confusing time to be looking at this economy in general and like being certain about which way things are going to go, right? Because on the one hand, we still have all-time high stock markets. We still have near all-time high housing markets. You still see your neighbors driving the brand new car, and it can give the appearance that everything is going fine until you see that neighbor lose the job, or maybe you lose the job, and then it finally becomes real and it happens to you. And it doesn't even have to be a job loss. It can just be a major financial hurdle that can set people back as well. Here's something interesting from this survey also, is they say the drop in consumer confidence was steepest for consumers aged 35 to 54. And I find that interesting because that's my age group, along with a lot of people who watch this channel's age group. I feel like this is the age where people still have to pay attention to what's going on in the economy because you're actively still working, still trying to build up your retirement and all of this. We're the ones who are kind of like affected by this the most because you're getting closer to retirement age and old enough to have seen some things already happen in the past, whereas generations younger than this are just now entering the workforce. They don't really know any better. They're unsure of what's going on. And if you're beyond that age group, you know, if you're in your 60s, 70s, or older than that, chances are you're already retired and probably don't even care, unless you're living on a fixed income and your budget's being squeezed by inflation right now too. So this age group of 35 to 54 actually has become the least confident age group in the future of the US economy. Surprise, surprise. Look at me making these videos. Everybody else out there who makes these videos all around kind of like the same age group like that. I don't think that's a coincidence, guys. You know, people are seeing the fact right now that they're getting fewer hours at work. Many people are talking about how their hours have been cut. They're seeing their wages remain pretty stagnant and not keep up with inflation anymore. People are seeing fewer job openings. These are all signs that it can be very difficult to move forward in this economy if you lose a job, or even if you don't lose a job. You know, can you keep up? Can your earnings keep up with how much the cost of living has gone up? That's a major concern too. One last interesting anecdote from the Consumer Sentiment Survey is they say the proportion of consumers anticipating a recession over the next 12 months remained low, but there's a slight uptick in the percentage of consumers believing the economy is already in a recession. So those are most likely the people in this age group who watch this channel, who realize that that's where things sit right now. The other day I talked about trucking and how the trucking industry is already in a major recession due to the lower volume of shipments, which also signals that things aren't going so well right now. Okay, one of my viewers who's a trucker said this. He goes, "Let me put it this way. I'm an independent truck driver with paid off equipment and home, zero debt. I cannot move forward in this economy. What I make barely covers insurance, maintenance, and taxes," guys. That's how slow the trucking business is right now. And remember how busy trucking and FedEx and all these companies that are related to shipping is a direct result of how much stuff people are buying. So this means people are not buying a whole lot of stuff anymore. So let me know what you guys are seeing out there. Let me know what you're seeing when it comes to jobs, when it comes to hourly pay, when it comes to wage increases. Let me know what you're seeing in your local area, guys, because I look at the comments. I do take them into account when I'm making these videos, and I use some of them to give some good firsthand accounts of what's happening out there. So if you enjoyed this video, make sure to subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.